space itself. With me, Nigel, we are talking about Bikaji Foods. The management of the company joins in now as the GST rates have been curtailed for namkeen mixtures and bhujia snacks all the way from 12% to 5%. Manoj Verma, who's the CEO at Bikaji, joins in to discuss the impact. Manoj, congratulations, and I guess more snacking to you and all of your customers. The important question right now, what proportion of your overall portfolio now stands at 5%? And what do you expect as incremental growth, volume growth, because these rates have come down from 12% to 5%?
Good morning, and thank you for inviting on the channel. For us, if we look at this, about 78% of our business was under 12% GST regime, which now will come down to 5%. Other than this, sweets were already at 5% and papad were no GST. So now if you look at, say, about 94% of our business would be on...
All right, we've snapped that connection, but as of now, what we understand is earlier 78% of your overall portfolio was 12%. The remainder was about 5%, which was sweets and papad. And now we have 94% of your overall portfolio, which now stands at 5%. And the remainder, which is papad, etc., would be around 0% itself. So a large proportion, nearly your entire portfolio is from, 12% comes down to about 5%. The other part of the portfolio having no taxes. And that the street is liking that because we have seen a big up move in the stock price itself. Bikaji up around 4-5% as we speak right now. The street believes that this could boost consumption. Currently, now the rate has settled to about 1.8%. But remember, a large part of the street were expecting this, which is why over the last month or so, the stock has seen a rally of about 7.5 to 8%. We do with us, Manoj, you were saying that 94% of your portfolio now stands at 5%. The question is, how much incremental volumes can you see because of this reduction from 12% to 5%?
So in our overall portfolio, if you look at about 40% is on 5 and 10 rupee price point. And that's where you cannot pass, in terms of, say, price reduction that you make it 9 rupee 50 paisa or 9 rupees. So that's where the volume is going to get increased, and which is what has been done during the times of inflation, that instead of increasing the price, the grammage had gone down. So what we feel is around 3 to 5% would be the volume increase on account of the GST benefit.
All right. And what about this? This comes in from September 22nd. Yeah. What about, you managing your existing supply chains, your channels, etc., up until September 22nd? Because I'm sure a lot of your dealers, etc., would say that why should we buy now when we can buy it at 5% GST? So how will you account for that change? And could there be any near-term disruption because of that?
So we operate on very minimum inventory holding at our company level. That's what it is. So we keep it about 2 days kind of our stuff. So business will not get disrupted in terms of offtake, but certainly in terms of stocking, which is what normally happens during the season time, would get impacted to the time there's more clarity on that what will happen on the stocks which are on a higher GST already built.
All right. And what about, the margins? This time around, obviously, everyone is saying that these prices will be passed on, etc. But at the same time, the anti-profiteering clause has also been taken out. Do you think some people would be tempted to perhaps keep a little bit of an extra margin cushion, or that is not happening?
I think we welcome, as an industry, as a category, we welcome this GST reduction and would definitely pass this benefit to the consumer and would help category grow. Also, in this competitive environment, this will not be so easy for any individual, any player in the competitive space to hold that, just keep all. Of course, if not 100%, but most of it will go to the consumer. That's what we feel.
Okay, all right. Hi, Manoj. Good to see you. And clearly, this has come, as a big boost for the industry and for your company as well. So give and take everything for the second half of the year and for the year on the whole. What kind of a revenue growth can you look at? You are already indicating that you want to improve margins by, I think, 40-50 basis points per year. Are you stick to that?
Yeah, we'll stick to that. And I think this will make things easy. And we may exceed that stuff if possible.
All right, you may exceed the margins. And overall volumes this year, you said low teens volume growth every year with 2 to 4% price growth. First quarter, you did about 14% revenue growth, underlying volume growth of about 7.5%. With this GST benefit coming in, incremental 3 to 5% volumes, What are you targeting for the overall year when it comes to volumes and overall prices?
So if you look at in terms of sweets business, which is huge in say Q3 even during the festive time, that's not impacted with this GST change because in the erstwhile regime as well, it was 5% and it continues to be on 5%. However, on our stationery business, which would reap this benefit in the latter half or 6 months of the year. So now considering that 3 to 5, so we may think of say something between 1.5 to 2% volume increase on this account.
So double-digit volume growth
Yeah.
should happen this year. Thanks a lot, Manoj, for joining in. And how, by the way, is consumer sentiment? Are you seeing some sort of improvement?
I think, being this time a very holistic tax reduction stuff, it's not only one category has impacted. So be it service industry, be it personal care, overall. So discretionary and non-discretionary. So we being a discretionary category, we feel that we definitely will reap benefit and overall consumer sentiments are also pretty good, very strong sentiments.
So sentiment is good, but with or without GST, have you seen any improvement? Because earlier...
Yeah. So which is what we spoke the last time as well. That
exactly.
From the beginning of this year, so Q1 onwards, there's an uptick in the momentum. And I think that this will further boost it up.
And raw material inflation, not a problem anymore. We've seen some decline from the highs for palm oil prices as well.
So not so far. I mean, palm oil prices are stable at the same, but that's new normal. That's how we look at it.
All right, take that point, Manoj. Thank you so much for joining in and giving us your views. Double-digit volume growth not out of reach. Incremental volumes from this cut could be 3 to 5% on an annualized basis, but because we have just one half of the year, it'll be 1.5 to 2% on their namkeen portfolio. So 94% of their portfolio now stands at 5% GST. The remainder is GST nil, which is why the stock higher. What we'll do is take a short break. On the other side, we have an exclusive conversation lined up with Rajiv Bajaj, who's the Managing Director of Bajaj Auto, in conversation with Parikshit Luthra.